Hello students, Assalamu alaikum. Today we are going to solve MCQs for AS levels. So this is your paper today. Bismillahirrahmanirrahim. Okay. Now this paper today the paper I have selected for AS level is from March 2021, paper 12. Okay. This is especially Indian edition. Okay. Now first question. A business values inventory at the lower of cost and NRV. Accounting concept behind lower of cost and NRV is prudence concept. Done? Not to worry at all. Prudence concept. This is the answer. Okay. Option D is the answer. Okay. Now, question number 2. On May 1st, Tom sold an old motor vehicle with a net book value of 10,000 to Arnold for $12,000. Arnold paid $7,500 by check and agreed to pay the balance by installments. Okay. What was the net effect of these transactions on Arnold's accounting question? No, they did not ask for Tom, they asked for Arnold. So when Arnold bought this instrument, this motor vehicle, he has paid 7,500 by check and agreed to pay the balance in installment. Okay. Now, first of all, this transaction of buying non-current asset has no effect on owner's equity. First. So the answer could be A or D. A or D. So which has no effect on owner's equity. B and C could not be the answer. Now, if he has paid out of 12,000, if he has paid 7,500, it means he has to pay a 12,000 minus 7,500. So his liabilities increased by 4,500. So D option should be the answer. Okay, not A option. B and C are irrelevant because they are showing effect on capital and equity. Okay, getting my point clear. Okay. Now come to question number 3. Okay. Now question number 3. Which item is not included? Which item is not included as part of the capital cost of new machine? It means which is a revenue expenditure. This is a revenue expenditure. Interest on loan used to buy the machine. Very simple. Come to question number 4. Why does a business charge depreciation on its non-current asset? Now, in option D, they have given the definition of depreciation. Getting my point clear? This is the definition of depreciation, to spread the cost of assets over their useful lives. So it means D option is the answer. The definition of depreciation is given here. So not to worry at all. Go to the next. Okay. Question number 5. Now, question number 5. Okay. The net book value of motor vehicles of a company is shown beginning of the year $312,000, end of the year $305,000. During the year an old vehicle was traded in as part of exchange for the new vehicle. The part exchange value of the old vehicle was $8,000. The remaining purchase price of new vehicle was $30,000. Was paid by check. What was the depreciation charge for the year? Oh, it's very easy. See, 312,000 is start of the net book value of motor vehicles at the start of the year, plus the cost of new vehicle is 38,000. 30,000 we paid by check, 8,000 is trade-in allowance or exchange value. That makes it 3,50,000 minus at the end of the year 3,05,000. 45,000 is the answer. Getting my point clear? So D option is the answer. Okay. Now come to question number 6. Okay. Now question number 6 says the bank statement of a business showed a credit balance of 4,520. This does not agree with the cash book. The followings were discovered. Bank charges 89 had not been entered in the cash book. Unpresented checks 680. A dishonor check of $210 appeared in the bank statement was not shown in the bank cash book. Sales receipt of $750 had been entered in the cash book but did not appear on the bank statement. Now, what we have to do, we have to take the credit balance 520 as per bank statement, and these two items are from bank reconciliation statement. Okay, are you getting my point? And these two amounts, these are part of revised cash flow. So we have to ignore these two things, these two items we have to ignore. Okay, only we have to concentrate on what? We have to concentrate on what? We have to concentrate on these two dots, which are item of bank reconciliation. 4520, unpresented checks less, unpresented checks 680 plus uncredited deposit 750, 4590 current assets. So B option should be the answer. Okay. Getting my point clear? We have to ignore these two amounts. We have to concentrate on bank reconciliation, not the revised cash. Okay, now come to number 7. So B option is the answer. Okay. Now number 7. We have what may help a bookkeeper detect errors in the accounting records of the business. Books of originality, no. Not this one. Sale ledger control account, yes. Statement of final position, no. Trial balance, yes. So 2 and 4. So answer is option C. Okay, these two items, the sale ledger control account and trial balance indicates are errors. Okay, only these two accounts. Okay. Now the closing balance on purchase ledger control account 163762. The purchase general has been undercast by $1,000. So if we increase purchases by 1,000, the answer should be option C, 164762. Not to worry at all. Getting my point clear? Option C is the answer. Done? Okay. Now come to question number 9. A business has calculated its draft profit for the year as 15,000. The following were then discovered. General expenses understated by 600. The sales journal of total 55,690 had been posted to the sales account at 56,590. Okay, this is error number 1 is casting error. Error number 2 is transposition error. Okay. Number 3, repairs to vehicle had been entered in the of 11 had been entered in the vehicle account at cost. Okay. Now this is error of principle. Salaries account include traveling expense 2,400. It is also error of principle. Okay. Now what we have to be very much careful about. What we have to be careful. Those errors which are going to affect the profit. Getting my point clear? Okay. Error of principle. Okay. Now those errors which are going to affect the profit are 1, 2, and 3 only, not 4. Because the thing is now 15,000 is the draft profit. General expenses, if we increase general expenses, it means definitely the profit is going to decrease. If we change the sales figure, 55,690 was the original figure, we wrote 56,590. It means 900 revenue is overstated. When we can rectify this error, profit is going to decrease by 900. And repairs expense has not been recorded because it has included into the vehicle's cost. So when we rectify the error of repairs, it is also going to decrease the profit by 1100. But the fourth error of principle is not going to affect the profit, because even this 2,400 expense is anyhow deducted from the profit, whether it was included in salaries or in travel expense. It was deducted. Okay, so we have to take 15,000 minus 600 minus 900 minus 1100. So the actual profit would be 12,400, the corrected profit. Getting my point clear? Corrected profit 12,400. Okay. So this is the answer. Now come to question number 10. A sole trader maintains a provision for doubtful debts at 5% of trade receivables. Provision for doubtful debts at the start of the year 2750. The following information available at the end of the year. Trade receivable 37,500 and irrecoverable debts written off during the year 500. What is the effect on profit for the year? Be careful. They are not talking about provision. They are talking about effect on profit. Getting my point clear? So we have to be very much careful about that. Okay. Now see, 37,500 trade receivable minus actual loss 500. That makes trade receivable 37,000 multiplied by 5%. So that would make your provision 1850. So if you are going to decrease your provision 1850 2750, you have to decrease it by 900. So your profit is increased by how much? Your profit is increased by your profit is increased by how much? 875. Okay. Okay. 875. Okay. Now, Isharba has a financial year end on 31st December. On 31st March 2020, she transferred her private vehicle to business at a value of 12,000. Her profit for the year end 31st December 2020 was 7,800 and her cash drawings amounted to $8,000. Depreciation of 900 had been provided on vehicles. Okay. She also took goods for her own use at a cost price of 1,000 and a selling price of $2,000. So what items we have to ignore in this question? We have to be very much careful about the items we have to ignore: depreciation and the selling price. Yes. Okay. Now take value of additional. Okay. 12,000 was additional capital. Okay. Plus 7,800 profit minus 8,000 drawings minus 1,000. The cost of goods she has taken for personal use, 10,800. This is the answer. Getting my point clear? This is the answer. $10,800. Okay. Now come to 12. At the end of his first year of trading, the trader lost all his inventory in a fire. He knows the values of sales and purchase, wishes to calculate the value of inventory lost. Which ratio should we use? Should he use? Okay. Now, question number 13. Question number 13. X and Y and partnership sharing profit and losses equally. Z was admitted as a partner and the net profit and loss sharing ratio would be 2 to 1. On the date of admission, the value of non-current asset was increased by 48,000. Now it means X will get how much? 48,000 divided by 2, 24,000 he will get. Okay. And out of 30,000 goodwill, he will get half of profit from revaluation. He will get half. Okay. And he will get half of the goodwill. So 24,000 plus 15,000 goodwill. He will get 39,000. Okay. Now, when they uh, uh, what they do, when they remove goodwill from the books of account, now the goodwill will be removed in the new ratio after the admission of SEC. So 30,000 multiplied by 2 divided by 5. 12,000, his total capital will be decreased by 12,000. So 24,000 you will get from revaluation of non-current asset. 15,000 he will get from the goodwill, and 12,000 will be removed for the goodwill. So his capital is increased by 27,000. C option is the answer. Okay, getting my point clear? C option is the answer. Now come to 14. Which item would appear in partnership appropriation account in the absence of a partnership agreement? Only two items: profit for the year and partner's share of profit. 1 and 4. So A option should be the answer. Getting my point clear? A option is the answer. Okay. Now come to the next question. 15. Okay. Annie and Bernie have been in partnership for some years, sharing profit losses in the ratio of 2:1. On January 2020, they decided to introduce interest on drawings. The annual interest on drawing for the year ended 31st December 2020 was 1,300 for Annie and 800 for Bernie. Okay. Which effect did this change have on the balance of Annie's current account at 31st December 2020? Okay. Now, drawings are interest on drawing is charged against the partners, and that would be added in the profit. So total interest on drawing that is charged 1,300 plus 800 is 22,100. Multiply by 2 divided by 3. 1,400 she will get from interest on drawing. She will get the profit 1,400. So his current account and his drawings, Annie's drawings are 1,300, and her interest on drawing share in the appropriation account will be 1,400. So her current account is going to increase by $100. Okay, getting my point clear? Okay. Now come to 16. The total shareholders' equity 31st December 2019 was 45,500. Okay. Now, issue of 10,000 ordinary shares of $1 each at a premium of 0.25. Okay. So 45,500 plus 10,000 multiplied by 1.25. 12,500. 45,500 plus 12,500. Okay, we are going to ignore this bonus issue because bonus issue has zero impact on shareholders' equity because the issue of share increases, but the share on premium share premium is going to decrease for bonus share. So it has zero impact on shareholders' equity. Shareholder equity is not going to increase with bonus share. Okay. Okay. Revaluation reserve, yes. Okay. That is 15,000. General reserves, profit for the year 20,400. Okay. And okay, what we are not going to include general reserve and the proposal. These three items should be ignored. So the answer is 93,400. This is your answer. Okay. Now 17. We have to calculate net cash flow in this question. Okay. Now see, repayment of debenture is outflow of cash. Okay. Now inflow 500,000. Okay. Net asset purchase, this is outflow 300,000. Net book value of disposal, not in the cash. Disposal proceeds, yes, plus 60,000. Revaluation surplus 20,000. No, it's not. So the items which we have to ignore in cash flow are net book value of disposals and revaluation surplus. So the total net cash inflow is 60,000. Getting my point clear? So your answer is A, $16,000. Getting my point clear? This is question number 17. The answer is A. Now 18. What could include in the reserve of limited liability company debentures? No. Ordinary share, no. Preference share, no. Share to yes. Okay. Which ratio would help? Which ratio would help a business to assess ability to meet its immediate cash requirement? Oh, test ratio. Asset test ratio. Now 20. The following information for a business was available at the end of each financial year: inventory, bank, trade receivable, trade payables, rent receivable in arrears, bank loan of 20,000, repayable in 4 equal annual installment. Okay, so that makes your total liabilities. Okay, now see total assets. Total assets, we have how much? 20,000 inventory plus 35,000 trade receivable plus rent receivable 58,000. 58,000 okay, divided by current liabilities. Bank 8,400 plus 15,000 trade payables plus 4,000 bank loan, because the bank loan is due, so it will be in the current asset. That is 27,400. Getting my point here? 27,400. So 58,000 divided by 27,400, 2.11. So that means 2.12 if you round up to the nearest, round up to second figure. So we will get the answer, that is 2.12 ratio. This is the answer. Getting my point clear? Okay. Now come to 21. A manufacturing company pays its production employees basic wages at the same hourly rate every week. It also pays them a bonus based on achieving production target. What sort of cost is an example of semi-variable cost? Nothing. 22. A company received the following units of raw material into inventory. Okay. Units 120, 100, 60 per unit cost total is given. Inventory valuation is using F2. Okay. The closing value of inventory we have to calculate. They have issued 240 units to the plant. Okay. Now what we have to do? Total unit 120 plus 100 plus 60. That means total units 280. Okay. Total cost 4560 plus 4,000 plus 2640. 11,200 divided by 280 total units. Answer is 40. Average cost of per unit is 40. Out of 280 to 40 is issued. It means 40 is remaining. 40 multiplied by 40. That means 1,600. So the answer is option C. Getting my point here? Okay. Now 23. Production level 15,000 units and 25,000 units. What is the budgeted fixed cost? Very easy question. See, 546,000 this cost, minus 406,000, this cost, this total cost. The difference between two fixed costs, two total costs is $140,000 divided by 10,000 units, the difference. It means variable cost in this question is $14. Now that variable cost, if we multiply by 15,000, it means 210,000 out of 406,000 is the variable cost. 196,000 is the budgeted fixed cost. Option A is answer. Getting my point here? Okay. Now come to, in March, the company overhead absorption rate was $2 per machine. In April, this rate increased. What had increased in April, causing the change in the overhead absorption rate, cost of insurance of factory? Yes, this is the answer. Achha, why not other? This is direct cost. Okay, this is not. This is the actual. Okay, budget machine hours increases denominator, not the numerator. Only cost of insurance will increase the numerator. Okay, so we have to be careful about that. Okay. Now come to 25. Okay. Now what we have to do? A business absorbs its overhead on the basis of machine hours. Following information is provided. Overheads budgeted and machine hours are given. 5,60,000 divided by 7,000 budgeted means $80 is overhead absorption rate, budgeted overhead absorption rate. Multiply by 6,700 actual units, actual machine hours, will get 536,000, but the actual overhead is 564,000, means 28,000 under absorption. So D option is going to be the answer. Okay. Now, which situation is not usually suitable for the use of marginal costing? Okay. Negotiating a regular selling price with a customer. Negotiation has nothing to do with marginal costing. So this is the answer. Okay. Now 27. Okay. 27. What we have to do, we have to take all the variable cost. Minus selling price 53, minus variable cost direct material 22, minus variable manufacturing overhead minus 2, minus variable selling expenses minus 1. So the contribution is 28. Okay, 28,000 is your contribution per unit. Okay. Now, what we have to do? $28. Remember, okay. Our contribution is 28. Now, what we have to do? We have to take out fixed cost. How to take out fixed cost? Take all the fixed manufacturing expenses. 21 plus 5, 26. Multiply by 10,000 units the production capacity. It is given in the question. Here it is. So the fixed cost is how much? 10,000 units multiplied by 26 is equal to 2,60,000. Okay. Total fixed cost for 10,000 units is 260,000 divided by contribution 28. Answer is 9,285.7, means D option, 9,286 rounded to the nearest 10, and we'll get, yeah. Got it? Now 28. The budgeted income statement of J Limited shows the following: sales, variable cost, fixed cost, profit for the year, margin of safety in dollars. What we have to do, first we have to calculate the fixed break-even sale. The break-even sale and then the current sale. For margin of safety, we should know the current sale and the break-even sale. What is the current sale now? $400,000. What about margin break-even sale? Sorry, break-even sale. How to calculate break-even sales? See, first we have to calculate CS ratio. 2,40,000 divided by 400,000. CS ratio is 60%. 60% is CS ratio. So if we divide 1,20,000 by 60% divided by 60, the answer is 200,000. 200,000 is your CS ratio. So you will get 200,000. Okay. Now here we have to calculate contribution, and the contribution is how much? 400,000 minus 40,000. That makes 160,000 is your contribution. So contribution to sales ratio is how much divided by 400,000? That is 40%. So if we divide fixed cost, $132,000 divided by 40%. That is 330,000 is your break-even sale. Current sale is 400,000. Break-even sale is 330,000. So 70,000 is margin of safety. So this is going to be your answer. Okay. 29. Achha. A business provided the following budgetary information. Break-even sales revenue 30,000, fixed cost 80,000, target profit $144,000. So what we have to do? Okay. $80,000. Now, current the break-even ratio. If 1,80,000 is the fixed cost and 300,000 is the break-even sales, it means the contribution is 180,000. Fixed cost and contributions are equal at break-even. So 1,80,000, the contribution divided by the sales, break-even sales, it means 60% is the contribution. So what we have to do, we have to take 1,80,000 fixed cost plus 144,000 target profit divided by 60%, and the answer is 5,40,000. Okay. Now, what about which factor should be considered when setting a budget? Availability of skilled labor, yes. Production capacity, yes. Quality of goods we produce, yes. It means option A is the answer. Okay. So that's all for today. Okay. Inshallah. Inshallah soon. I've got 2 or 3 requests of solving papers, different papers. Inshallah, I'll be solving them and complete them as soon as possible. Inshallah. So for today, it's over. Take care. Allah Hafiz.